Hi, Andrew and Maureen. Today, our group will show you about our wealthy planning recommendations to you. And here is our agenda. So, as we begin our wealthy planning session today, I would like to ensure that I fully understand your current situations and future aspirations. So, Andrew and Maureen, I appreciate you sharing your history and the plans for us. And from our previous discussion, I understand that you both have had a significant life changes and are now planning a future together. And Andrew, you have experienced a substantial growth in your investment since selling your company. And Maury, you have mentioned that you are concerned about the market volatility and your upcoming inheritance of the family summer home, which has specific conditions attached. And I also recognize you shared a commitment and your concern about long-term care as you both age. So ensuring that all this information is correct will help me and make sure my advice fits your specific needs and goals. So could you confirm if there is anything else you would like to add or any other concerns you have that we should address as we develop your wealthy planning strategy? Okay, so okay, all good. And here is our current investment portfolio now. So Andrew's portfolio has a shift from an initial of 60% stocks and 40% fixed income to a 70% stocks and 25% fixed income. Allocate due to strong equity growth, right? And below here this is our financial goals. And our financial goals are maintaining lifestyles and spending out 150,000 each annually while continuing to support a charity includes your church, and you guys want to secure a fair inheritances for your children, especially concerned about that summer home gift and the plan for a long-term care needs without your children's help. In managing our investments, and we seek a balanced approach that align our risk tolerance and the minimum taxes.
Thank you, Ziqian, for giving us the background. This is Tianjuan Xu, and let me walk you through the investment recommendations. So here's our portfolio reallocations. We adjust your current equities percent to 15%, fixed income to 75%, and also 10% in alternatives. Because we consider your willingness on the tax reduction on your current portfolio, and also as you moving on to the retirement, we want you to have a pretty stable income, but also low risk. So here's a breakdown. So under equities portfolios, we want to have a dividend paying stocks because Andrew, you still have a great insights on the equities market, and in the past years you still have a great considerable return. So we want to keep on the momentum you have. So we still want to put it in your stock you are invested in. Then we want to have an international stock as well because to diversify the risk exposure you have on the US markets, such as in the China or Japan. Under fixed income, we want to invest in government bonds. It gives us a low risk but stable return and under the lowest default risk you can have. Also, then in the corporate bonds, we will invest in the investment grade corporate bonds, which is BB and above, as it will still give a moderate return, but still low default risks. Then we want to put it in the municipal bonds, which will reduce your taxable income, since it is a government bonds and a government projects. Then on the 10% alternatives, we want to invest in the hedge funds, which give you a high return. But we can use hedging strategies to hedge against the risks. So don't worry about the risks. I will still give you a pretty stable income. Then it is in the real estate rights. It will give you a protection against the inflations. So in 10 years, your income will be still looking good. Here is our asset reallocation breakdown. So Andrew, Maureen, your total investable assets is $11.6 million US dollars. So looking to the fixed income of 75%, we want to have a 55% on the government bonds, 25% on the corporates, and 20% on the municipal. And our assumption on the 10-year return is about 4.8%. And looking to the equities, we want 66.7% on the dividend-paying stocks. Since, as I mentioned, Andrew, we want to keep on your momentum on the equities market return. Then we want a 33.3% on the international stocks. Then alternatives, we want half and half on the real estate and the hedge funds. And the 10-year return, we based on our assumption, is about 5.5%, which is lower than equities, of course, because it bears lower risks, but higher than the fixed income. And let's introduce Zhehan for his tax planning and insurance planning for Andrew and Maureen.
Okay, let's talk about the tax planning for two people. First, for Andrew, using tax loss harvesting can reduce what he owns in taxes from his investments. He should also put more money into his retirement accounts to lower his taxable income. Considering estate planning with trusts or donations can help him avoid large taxes when he passes his wealth to others. For Maureen, she should also maximize her retirement contributions to reduce her taxable income and choose investments that don't generate a lot of taxes. Regarding insurance, Andrew needs more life insurance and should increase his umbrella insurance to protect his wealth. He might also think about the insurance that covers long-term care costs. Maureen needs to check if her life insurance is enough to cover any big expense or support others after she's gone. Her umbrella insurance should also be enough to cover any big risks.
Hi, Mr. Andrew and Mrs. Maureen. My name is Xiangcheng Lin. Thank you for trusting me to help you navigate these important aspects of your future together. Let's start with the estate planning. To begin, I recommend setting up the trust specifically designed to safeguard your most significant assets, such as the summer home on Sea Island. By doing so, we ensure these remain within your family lineage, which is especially important to you, Mrs. Maureen, as your family wishes this property to stay in your family. Additionally, this approach provides clear guidelines for its future management and preservation. Concerning your concern about potential healthcare needs and the cost implications, I suggest developing a long-term care plan. This will help manage healthcare expense and preserve your wealth, ensuring that your assets are used according to your wishes, not just for healthcare costs. We will also implement tax-efficient strategies like the strategic gifting and the charitable donations to minimize the tax burden on your estate. These methods will not only reduce your overall tax liability, but also allow you to continue supporting this cause you care deeply about in a financial sustainable manner. Now let's talk about some detail about the family law planning. Turning to family law planning, we will draft a prenuptial agreement that reflects the fair treatment of all children and protects your assets. This agreement will align assets division and inheritance rights clearly, ensuring both clarity and protection for you in any future situations. Although your children are adults, legacy planning is still important. It's about more than just assets. It's about instilling your values into next generation, incorporating charitable giving and preserving family traditions within your estate plans will help you leave a lasting impact that honors your beliefs and supports your community. And finally, while you don't have minor children requiring guardianship, they may have minor grandchildren or other dependents who require guardianship in the event of their parents' passing. It's important to designate guardian for minor children in their estate planning documents, ensuring that their care and upbringing are interest to responsible in to response individuals who share their values and properties. So this is the two parts I responsible for. And now let's welcome Xunda for introduce the cash flow planning. Thank you.
Hi, I'm Xunda Chen. Let's move on the cash flow planning part. Our objective is clear: to ensure financial stability while adjusting your portfolio to support both your lifestyle and philanthropic commitments. You have both been generous in your contribution to society, and maintaining this legacy without compromising your financial health is our top priority. We have tailored your portfolio to increase its fixed income component to 75%, focusing on government bonds for stability, corporate bonds for a slight yield boost, and municipal bonds for their tax-exempt benefits. This shift is designed to provide you with a steady and predictable income stream, minimizing the volatility associated with the equity markets. To stay ahead, we will initiate a biannual review process with your financial advisor. This will not only help us reassess your spending and saving strategies, but also ensure that your portfolio adjustment align perfectly with market condition and personal expenditure needs. In addition, we will incorporate advanced financial monitoring tools to provide you with real-time visibility into your financial status, helping you make informed decisions quickly. Then let's move on the charitable giving parts. Turning to your philanthropic activities, we aim to maximize the impact of your generosity. The strategic shift towards dividend-paying stocks and broadening international exposure in your equity portfolio is designed to enhance returns, which will support your charitable contribution effectively. We will establish a DAF by the next quarter. These tools will allow you to manage your charitable gifts more flexibly, ensuring that your donations are timed perfectly to maximize both financial impact and tax benefits. Furthermore, we recommend investing in REITs and the hedge fund, which will not only hedge against the inflation, but also provides higher returns to further support your charitable activity without adjusting your financial goals. By integrating these strategies, Andrew and Maureen, you will not only continue to live comfortable, but also leave a lasting impact on the causes you care about so deeply. Together, we will ensure that your financial strategy aligns with your personal values and family goals, allowing you to enjoy peace of mind in your retirement years. Thank you for entrusting us with this crucial aspect of your lives. Let's move forward with these strategies that reflect both your financial acumen and heartfelt generosity.